price of any asset is always impacted by a combination of factors. Unlike traditional financial assets, Bitcoin, and therefore the entire crypto market by correlation, has historically had its own set of factors affecting its price. Do things look any different now? Well, let's find out. Basic factors like supply and demand or institutional adoption are often seen as driving factors, but we'll continue to peel back the layers of how news and events also have a significant impact on the price action. The adoption and growth of fundamentals affects the intrinsic value of cryptocurrencies. And so investors have an interest in following and responding to news around things like blockchain hash rate, transactions per second, transaction fees, and overall adoption. The crypto news cycle is a great way to keep up on important blockchain fundamentals and to follow their effects on utility. Unfortunately, that isn't always reflected in the current market price. For example, in the case of Bitcoin miners, they expend real resources to generate the computing power required to secure and operate the Bitcoin network. An optimally performing blockchain serves as a medium for secure transactions and attracts users, developers, and intermediaries, thereby leading to an increase in the cryptocurrency's network effect. Computing power and network size are empirically related to Bitcoin prices. In the case of Ethereum, news on fundamentals like transactions per second, transaction fees, and active wallets all play a role in usability and adoption of the application ecosystem. A trusted, well-oiled blockchain should have a trend of positive news coming out to support the fundamentals that drive the utility it relies on the most. Here are 3 concepts to keep in mind when you're looking at this. Retail is always the last to know, and the whales will use this against you. Price is usually baked in, so consider buying the rumor and selling the event. And news doesn't always move the markets, but conviction of market makers and retail participants actually leads to price action. Black swan events are rare, unpredictable, and perhaps 10 to 100 times bigger than normal events in the market. They cause extreme volatility and can either damage or even benefit the condition of the market. Recent negative black swan events include things like the chain of interconnected companies falling in the Luna 3AC Celsius Voyager collapse, and the economic devastation of COVID-19. Whereas positive black swan events could come from things like a sudden quantum leap forward from a technological advancement. For example, the rise of the internet, or perhaps from an unexpected fall of a problematic dictatorship in the world that results in some positive restructuring of a portion of the globe. The crypto market has matured, and affairs that once carried the power to create black swan events no longer have the same impact. For example, when Bitcoin was trading in the hundreds of dollars, an announcement of retail stores accepting Bitcoin could cause dramatic price action. But in contrast, today, a similar announcement from major companies, even something like Gucci, is considered a non-event. A true black swan event has elements of unpredictability, rarity, and a scale of impact that defines the market through the impact and the ripples that it creates into the future. As the crypto market matures, new trends are emerging that we haven't observed before. Initially a fringe asset, Bitcoin is increasingly acting like a traditional asset, sensitive to the same market forces that affect those markets. In addition to news on crypto, regulations, and institutional adoption, Bitcoin price is now affected by changes in the general economic conditions and world events that impact traditional markets. This means cryptocurrency markets are no longer decoupled from traditional global economic trends and news. If the traditional markets take a dump, so will crypto. And no trend within crypto is big enough to stop it. According to the International Monetary Fund, correlation of cryptocurrency assets is, in absolute terms, to global equity markets are significant. And the IMS fears that crypto has reached the scale where, in turn, it affects the traditional markets. They go on to suggest that close monitoring of the crypto asset markets and the adoption of appropriate regulator policies are warranted to mitigate potential financial stability risks. That's right. In short, traditional finance is afraid of the impact of crypto, and it can no longer be treated like some sort of passing curiosity. The news cycle is a great resource to learn more about specific cryptocurrencies and the market as a whole. News relating to blockchain fundamentals gives a window into the health, utility, and adoption of the technology. Media around sudden, unpredictable swan events like the COVID-19 crash is important to follow, even though the news cycle trails behind these large price swings. And in recent years, we've seen a growing correlation between traditional global economic trends, making following the traditional finance news more important than ever. Yes, all of this can be combined with your technical trading skills to help you improve your trading success. But the greatest value in following the news is to simply gain a well-rounded understanding of blockchain technology and the general market trend. CryptoMonk's content is not financial, tax, or other advice. Never transact based on it. Do your own research and consult certified advisors. Investing is risky and you could lose everything.